Good evening and welcome back to the First Time Buyer Show. I'm your host, Estee. This evening we talk about going from being retrenched in the corporate space to being a property investor. We speak to Lawrence Boel, who is not only a property coach, even an author of his own book, and now a property mogul, basically the definition of it. Hi, Lawrence, how are you this evening?
Hi, Estee. Thank you, and welcome everybody on board. It's great to have you on this call tonight.
Thank you so much, Lawrence, for joining us. I mean, COVID-19 is such a hectic time. You've been retrenched. And in this time, I'm sure a lot of viewers, people we know, friends, family, have too been retrenched in this time. And I'd love to talk about how you went from being retrenched to becoming like a property investor. Maybe just talk us through your journey of this.
Yeah, so I mean, I kind of was forced into property, right? I was working for a big IT company, and yeah, got basically retrenched. They were going through tough times. That was about 6, 7 years ago, and because of the need for another income stream, I got into property. I thought it was a safe investment asset. I went on some courses. I learned from Robert Kiyosaki, author of Rich Dad Poor Dad, and I learned some of the insider secrets to property investing. And slowly but surely, I've been able to build up a small portfolio that now allows me to follow my passion of writing as opposed to working because I need a paycheck. So I kind of got into property because I needed to find another avenue. And maybe the listeners listening today are also in that same boat. And I just want to let you know that property is a great place to start to build a side hustle, another income stream, or to look after yourself more financially.
Exactly. And on your website, you talk about three key things, knowledge, capital, and the tools to be competitive. So at this time, I'm sure you didn't know those three things, going from a BSc degree to a property investor. So on the note of this, you said you were forced into it, but I'd love to know what else was your motivation to get into property?
I wanted freedom. I wanted financial freedom. I wanted to be able to do what I want, when I want, with whomever I want, and not be told what to do. And I think that's what, you know, corporate just didn't work for me because you have someone telling you what to do, where to be, what to wear, what to say. And it got to me. And I wanted to be the guy that's on the beach with my laptop writing a novel or, reading a book and not having to worry about money. And I've looked at all different asset classes. I can tell you property is the one that allows you to earn a passive income stream. And passive income is what allows you to be financially free because you don't have to work to make it happen. It happens without you being there.
Exactly. And we hear this week after week. I mean, to the viewers at home, how many times have we heard that financial freedom, the way to go about it is to invest in property? And you're living proof of that. If whatever your goal is, whether it is to sit on the beach, read a book, in your case, write a book, one way to go about it is invest in property. So, I mean,
Yeah.
going from being retrenched, and let's say one of our viewers or people we know are now retrenched and they don't have the finances to actually invest in property. How on your journey, how did you actually gather your finances or even pay off your mortgage at that time?
Yeah, so the first property that I invested in, I actually had the bank's financing because I still had a job. And for the viewers listening out there, the bank's financing is the cheapest that you're going to get, but it comes with a couple of conditions. You have to have a good salary, you have to have a good credit score. Um, what you might not know is there's many different ways to do creative finance on a property investment that sometimes requires little to no money. My favorite strategy is called the rent to rent strategy. Sorry about that. So the rent to rent strategy is where you can, let's say you rent a house, a 5 bedroom house in Brixton, which is close to a university in Johannesburg. Now, if you're renting from the landlord and you've agreed with that landlord, you're able to sublet to, let's say, 5 students. So you can rent from the landlord at 5,000 Rand, but then you can sublet to 5 different students at maybe 20,000 Rand. And slowly but surely, what you're doing is you're building a passive income stream of 10,000 Rand. So that's an example of where you don't necessarily need the financing to buy a property to still earn money from property, but by letting from the landlord with his consent, subletting to other people at a higher fee, the difference between what you're renting from the landlord and subletting to your new tenants, the difference is your profit, your cash flow.
Exactly. And I wanna go a little bit more into the creative finance, which you talk about a lot, because you're a property coach. But I want to talk about that just a little bit later. And on this topic of, creating or subletting and renting and trying to actually, you end up paying off your own mortgage, at the end of the day.
Yeah.
So the main important thing is the passive income. So there's really not much that one has to do when you have all these tenants who are paying everything off for you at the time. So on your journey of your first property, let's go back to the first one that you invested in. When you find agents, and you talk also about this on your website, finding the correct team, the correct investors to help you actually find your perfect first home. What was it like finding an agent?
It's kind of like finding a girlfriend. You kind of have to shop around, if I can put it that way, because there's certain estate agents that specialize in certain areas that have good knowledge in certain aspects, and it's your job as an investor to say, this is what I'm looking for, and interview essentially a bunch of agents until you find someone that meets your requirements. So my first deal, I just happened to stumble upon a really nice estate agent. And now that I'm more of a full-time investor, I've got 2 or 3 estate agents in different areas that I've done several deals with, and I've come to trust them, and they've come to know what I'm looking for. So my honest answer is just shop around a bit until you find someone who meets your requirements.
Right. And I think as a first-time home buyer, when you know your location, and then, like you said, finding an agent who specializes in that location, who knows exactly what you want. So it's very important. Like I asked you earlier, what was your motivation? And I think for first-time home buyers, I think it's very important to know what your motivation is first. And then your agent, if you can give your agent as much information as possible, they can obviously help make your dreams come true and, have a good investment at the end of the day. And then obviously, with your first, you said you were lucky to stumble on a really good property and have everything it just went really well. But were there any mistakes that you made when investing in your first property?
Yeah, I paid too much. I paid way too much. One of the first things that I learned when going through the journey of becoming a property investor is that you must always buy low. Try get a discount. If someone accepts your first offer, that means you've paid too much. So if I could have gotten maybe another 10% discount, that would have lowered my bond repayments, that would have made the deal or the investment just that much better. Otherwise, I got pretty lucky. It was a nice property in a good area. So otherwise, it was a pretty good deal.
So is this basically what you mean when you say your tools to be competitive? Is it like learning how to bargain with people in the market so that you can actually come down? Is that one of the tools one should have?
Yes, tools. When I mention tools, I speak very specifically of your Lightstone, your TPN, and your My Property app. So those are tools that you can use to determine what the accurate market price of a property is, what the area demographics are like. So there are actually specific property technologies that one can use to actually make a more informed decision. But as a first home buyer, negotiation is also a tool in your tool set that you'll need to develop to get the right deal.
Exactly. So knowing to bargain. And like you said, I think it's very important for us to know that if they accept the first offer immediately, something, maybe rethink and see if you can come a little bit lower. And that's really good advice, especially for first-time home buyers. How did you know, Lawrence? How did you know that you were ready to purchase property? I know you said that you stumbled into it by mistake, but I think as first-time home buyers, we need to know that we're ready, whether it's financially so, or even just because I think buying property and investing in property is really not for the faint-hearted. The entire process just gets more intricate as you go along. How did you know you were ready?
It's a good question. I think when you've got 20% deposits, for me, if I had to put like a rule to it, if you're a first-time home buyer, you're considering getting into the game, and you want to buy R1 million asset, or you want to buy in, I don't know, Four Ways Johannesburg, and it's R1 million for a 2-bedroom apartment. If you've got 200,000 saved up and you're able to get the affordability from the bank, so you've got a big enough salary that the bank will loan you the other 80%, I would say you're ready, because the reality is you're most likely renting from someone and helping that person pay off their bond. So as long as, I would say, for your first deal, you just need to be in the financial position to pay the down payment and get the affordability from the bank, and then go for it.
Right. So just have that 20% ready. And I think once you have that, I think that is, like you said, dealing with the banks does get a little bit difficult. And I think people maybe the millennials at this stage, we're really scared to talk to the banks. We think that all the terminology is going to throw us off. But I think if we just take it step by step, have the 20% ready, and just also find your house. And this actually goes to my next question. When you say finding the perfect home, whether it is for your first home or even the perfect investment for someone like you who's a property mogul, what exactly would you say, what exactly do you mean when you say location, location, location?
Yeah, so I think location needs to go with strategy. So my strategy, for example, is the cash flow strategy, which means I'm basically buying properties to rent out and the rent pays for my lifestyle. So that's when I say the word cash flow, that's what we mean in the property game. Now, when you're looking at a cash flow strategy, there are certain locations that work very well. You've got your Berea CBDs, you've got your Joburg South Rosettenville areas. Four Ways doesn't work. Sandton doesn't work. Greenpoint doesn't work. These higher income areas, the suburban lifestyle, you'll never get a place where the rent is greater than the bond. So that's where a location is important for my strategy. If your strategy is to buy a nice home for your family, well, then you want to be close to schools. You want to be in a nice suburban safe area. So I would say location is predetermined by the strategy of what you want your life to be. If you're looking at flipping a property, which means you buy at a discount, you renovate, you force the value up, and you sell it here for a profit, you're in the deal for 6 months, you want to go to the high income suburban areas. That's where Santon works. Or Santon works for the Airbnb strategy. So I think it's really location equals strategy.
Right. And I think what falls hand in hand with location is your motivation. Because what if, if you don't want to buy a property to live in, and that's when you hit your areas, like you said, your Bram, your Brixton, your Westdeens. If you want to flip it and have students and keep, having tenants in your property, that also counts on how you choose your location.
Correct.
And then, yes. And then I just want to move to back to, if it was for a first home, what are the financial advantages of investing in a property as my first home?
Yeah, so one of the great things I like about property and what I'd recommend to the first home buyers is get an access bond, which basically means that you get a bond with ABSA or with FNB, whoever it is that you choose. Ask them for an access facility, which basically means that if you pay a little bit more into the bank, you can still access that money later on. And now what you've done is you've created a nice little savings account where you're getting a pretty competitive interest rate. If you're getting a bond at 7, 8, 9% interest from the bank, anytime you put some extra savings into that bond, your money sitting in that bond is working essentially at 9%. So it's a great little safe, secure investment vehicle for you to put some of your extra savings into.
Right. So, I mean, to the viewers at home, they've heard it, an access bond. I guess it doesn't matter which bank you go to, but I think kind of find out exactly how that could work for you. And again, look at your motivation and where you'd like to buy the property, and also have that 20% ready. Just before we go to the ad break, Lawrence, I'd like to find out your journey, because we've been speaking about how you went from being retrenched and finally being financially free and living the way you'd like to and not having someone have control over you. But I think what's so important is the first time you closed that deal. I mean, that's obviously such a rejuvenating feeling. What was that like? And what can one expect from, closing the deal already in the phrases? It just sounds like I want to do that tomorrow.
Yeah, I felt like a boss. Like I really did. I think I was 24 or 25. I just started working and I walked out of that having signed the offer to purchase, and I felt like an adult, I also then was filled with fear and with nerves and with panic, because I was like, have I just tied myself down for 20 years? As a millennial, travel, freedom, this is such an important thing for me. Have I made a mistake? And that's all normal. And that's all totally okay. And I think once you get over the fear and you start to see the power of creating wealth, which is created in property, and you start to create generational wealth where your kids benefit from your smart decisions today, you start to overcome the fear and you become confident instead.
Exactly. And I think it's so powerful because it's such a big milestone. And I think a lot of people do think that for 20 years you have to pay off a bond and now you're trapped. But in actual fact, there are ways around this. There's ways to continue investing in property, whether it's, and like you said, don't aim too high. look at the areas where property is less than a mil and use, flipping is such an affordable way to fix up a property to make it look absolutely amazing.
Yeah, definitely. And there's lots of creative ways in which you can use almost no money or other people's money. We've got a term in the property space called OPM. And property is one of the easiest assets to leverage against. So using other people's money means you've got as much leverage as you want to go and buy property.
Exactly. So I think as much as the fear comes after purchasing your property, I think that we all just need to want it and also be ready. It's so inspiring, as you said. And I think you're also like a motivational speaker. So that was really amazing.
Thank you.
Just to have not only your, like I keep saying, your mission and your motive for investing in property. If financial freedom is the way, if that's your goal, I think, like you said, the property sector is where we should go. So Lawrence, we're quickly going to run to an ad break. To those watching at home, please comment. Do you want to be financially free? Comment yes or no and tell us what your financial freedom plan looks like. Let us know. And if you have any questions for Lawrence Boel, we'll be right back. Sit back and we'll be back soon. Good evening and welcome back to the viewers at home. We hope you've commented. Let us know what your financial freedom plan looks like. We're going to delve a little bit more into that right now with Lawrence Boel. Welcome back, Lawrence.
Thanks, Estee. Yeah, it's good to be back.
Thank you so much. Just before the break, we spoke about your journey. You went from being retrenched to a property investor, and really you just gave us the motivation to actually just go out and buy your property. The fear does come, and I think the reward is bigger than the fear. That's really, that's the gist of the first segment. We're going to move into what you focus on quite a lot. You are a property coach, and I read about how you talk about deal analysis and meeting and working with the right people. We briefly spoke about this earlier when it comes to agents, etc. But how do we meet the right investors?
I think you've got to be networking with like-minded people, right? If you want to become really fit, the best way to do that is to go to the gym, meet some buddies, go to the gym with other people. If you want to become a good cook, get around other good cooks. And the same applies for property investors. And for those viewers who are on the call today and they want to know a little bit more about property investing, I would recommend that they search the SA Property Investors Network. Great platform just for property investors. And that's where you're going to be meeting great estate agents. You're going to meet bond originators, your insurance brokers, your builders, your architects, your tax advisors, all the different players in the property game.
Right. So SA Property Investors, if you want to know more, I think, and like you said, surround yourself with like-minded people. That's really just the way to go about it. Keep networking. And I think if your team of people, or even just your friends, if you're having the same conversation about investing and having growth financially, this is where your mind should be, and that's how we meet people in these circles.
You know what they say, sorry Estee, they say that you have the same income, or you have the average income of the 5 people you spend most time with. So if the 5 people that you're closest with are broke, there's a high chance that you might also be broke. Now, I think it's important to categorize people in your life, because I've got friends that I love to have spiritual conversations with, and friends that I love to have social time with, to go and drink a beer or whatever. But then I've also got a certain subsection of people that really want to talk about property, wealth creation, business. And I think if you don't have a lot of people in your life in that stage, It's really important, especially as a millennial. As a young guy myself, go out and meet older people who have a bit of wealth or a bit of property experience, and network with them, because that's an incredibly important part of your financial plan.
Right. So, I mean, look at your 5 friends around you. I mean, just using that ratio. And I mean, if you know what their salary is like, then maybe just move a little and find 5 new friends. I think I just want to go a bit more into, like, let's say we find the right investors and we find the right team and the right people. You talk about return on investment. How does one calculate this?
Yeah, so return on investment is the buying decision, really. Now, Estee, you've got a bank account, and I'm sure everybody that's listening has got a bank account. And if you put your money into a bank account, the bank gives you a thing called interest. Now, interest is basically a code word for return on investment. If you put 100,000 Rand into a savings account into your bank, the bank says we'll give you 5% interest. So you're getting, your money is working 5%. That's how hard it's working. So if you go into a property deal, the return on investment needs to equate to essentially that 5%. So let's say you're doing a flip, which means you buy at a discount. You buy at 700, you sell for 1 million, so you make a 300,000 Rand profit. What you have to do is you have to take your profit divided by the money you've put in times 100, it'll give you a percentage. That percentage you can then compare to what you're getting in the bank. So let's say you're doing a deal and it brings you a 15% return on investment. You compare that to the bank's giving you 5%. That means this property is working 3 times harder for you. So that's kind of the return on investment calculation is quite complicated. I do have a whole bunch of YouTube videos on YouTube that you can go check out for free where I go into like the detail. But really, when you're looking at ROI, compare it to what you're getting at the bank.
I was about to say that it sounds so much more simpler than what I Googled. Just your explanation. I mean, because the way you explained it was really simple. And I think from listening to that, I want to move into something that, we kept bouncing back and forth from, which is the finance part of it. And you talk about, like you said, in the property sector, we talk about using other people's money. And we know the traditional way, like you say, going to the banks, taking out a loan or a bond, whatever the case may be. What is it? You specifically speak about creative finance, and that's using little to no money. How do we navigate through that? How can I do that?
Yeah, so one of the strategies that I think could work specifically for the millennial demographic, it's something that me and a few friends are doing. So we've come together with 5 of us. We're 5 working professionals, and what we've done is we put a little bit of money aside every month into a fund. So it depends what your friends are capable of spending or what you're able of saving. But let's say me, you, Estee, and 3 other people, we're able to put 5,000 Rand into a savings account every single month. 5 times 5 is 2,000 or 25,000 Rand per month that we're saving into this fund. Over 10 months, we've got 250,000, which is enough for a deposit. So you don't necessarily need to go into a property deal yourself. You and 3 or 4 of your new buddies who have some money, just put a little bit of money aside every month. It's almost like a stokvel, or we call it crowdfunding. So you don't need 1 million Rand. You need 10 friends with 100,000 Rand each.
Yeah, that's, I was literally about to say it's basically a stokvel, but what we're using the stokvel money for is investing. And I don't think we think that far. I think we stop at, let's see who gets the bulk amount at the end of the month, which I think it's so great for us as millennials to actually start thinking a little bit further and saying, okay, let's put money aside, like you said, and use this, even if it's maybe a rundown property that's 250,000. And then with the next amount of savings we put in for the next 5 months, we then flip it. We then renovate it, refurbish it and make it look even a bit better. I think I've got this now.
You see, you're thinking already. I like it. Maybe one other strategy could be using other people's money is using an investor's money. So especially if you attend the right kind of networking events, you're able to learn 90% of the value from a private wealthy individual, or maybe you've got you can access a company called TUHF, TUHF. They fund property investors regardless if you have a job or any kind of savings. So there's multiple different avenues, and I think the advice that I want to give to the audience, to the guys sitting there and hoping that one day they can be a property mogul, is that you can use other people's money. That money is not the problem. Definitely not.
I think the way to go is definitely to use other people's money, you know,
Yeah.
don't touch your own, I guess. So to the viewers on Instagram, we've got some viewers on Instagram who have some questions for you, Lawrence.
Oh, wicked,
Dr.
yeah.
Dr. Sida says, how do you make money out of property besides renting it out? So other methods.
Yeah, so that's a great question. There's essentially two ways in which you can make money off property. You can either buy and sell, buy and hold. The buy and sell strategy, you buy at a discount, you sell at a premium price, you make a small profit, let's say 100,000 Rand, and you're in the deal over 6 to 12 months. So it's called the flipping strategy. The other strategy is the buy and hold, where you buy, you rent out. Now, within each one of those two core buckets, you've got various different types of strategies. So within the buy and hold strategy, you can buy one apartment, rent out to one tenant. You can buy a block of flats, rent out to multiple tenants. That's known as a multi-let. You can buy student accommodation, rent out to 10 students. Obviously, the more tenants you have, the bigger your monthly profit will be. You can also look at, commercial. So that's when you start either renting to a company or to a business, or you can flip a commercial property. And you can even go to residential, not residential, sorry, industrial, or even development. This is where you buy a piece of land and you build 4 units. I would say, as a first time home buyer, start with the buy and hold or buy and sell strategy. And as you work up the ladder, you can get to the development stuff.
And then I think just to bear in mind, as we heard last week, when you buy and hold, there's actually some holding costs that come with that. So again, I think know your capital. So know what your finances are like, to also decide how you want to go about this, what you want to do with your property if you're not renting it out. Another question from Instagram, Lawrence, from Don750. He wants some advice. I bought my first property and I'm renting it out now, but I'm struggling to expand my business. Any advice?
Sure. So I don't want to get too technical, but the way that the banks loan is based on affordability, right? So I have a salary. I make, 30,000 Rand per month. The bank looks at that and they say, I'm going to take a third of that and I'm going to allocate that to your affordability. So I take my 10,000 out. I get R1 million loan from the bank. I then go and buy a property that I live in. Now I have to pay 10,000 Rand to the bank every month to cover my bond, right? So when the bank now looks at my second deal, my second investment, they're going to say, you're not earning 30,000 anymore. You're earning 20,000 because 10,000 is being paid to us. So now they're only going to take a third of the 20,000. Now what you can start to see is, slowly but surely, eventually you're going to run out of affordability. The trick is you could buy a property for yourself to live in, but the next property you buy needs to be cash flow positive, which means the rent needs to be higher than your monthly expenses. And when you make that profit, it adds to your affordability. So if you're able to buy a student accommodation that's making 5,000 Rand profit, you can go to the bank and say, hey, look, I'm making an extra 5,000 Rand. Can't you add that to my affordability? And that's the way that I've been able to leverage bank financing to buy a number of properties, because I'm not restricted by the affordability restriction. I hope that helps, Don.
Yeah, I hope that answered your question, because you gave us, the tricks to, and I think we need to, a lot of the time, inform the banks when you're making that little bit of extra income, because that just benefits you in the long run. You can then go buy more property and keep growing your investments. I want to get to the question, the main question of this part of the show is, a few weeks ago, we spoke about a financial freedom plan, and it was the gist of it was really just your 5-year goal of where you'd like to be. So I'd like to hear from you, property coach. What is your kind of explanation or definition of a financial freedom plan? How do we do that as first-time home buyers?
Yeah, so you need to set some really specific, achievable goals. It's the same with anything. If you want a six-pack, when do you want it by, and what action steps are you going to take to get there? So I talk a lot about, especially my book, is the 5-year financial freedom plan. So in 5 years' time, you want to earn how much passive monthly income? If you had to say, for example, that in 5 years' time, I want to have 20,000 Rand passive income from property. What that means is that every year you need to buy one asset that's bringing in 4,000 Rand passive income. Right? If 20,000 is your 5-year goal, 20,000 divided by 5 means that every year I need to add 4,000 Rand of passive income to my property portfolio. Now, if you look at an average deal, an average Berea flat, Berea in the CBD of Johannesburg. You can buy a property there quite easily for 200,000 Rand, and you can rent it out for 6,000. Now, if you run the numbers on that, you're probably going to walk away with 2,000 Rand profit after bond, after all expenses. So you need to buy 2 Berea flats every year for 5 years. That's actually not that hard. To put down a deposit for a Berea flat, let's say 20% of 200,000 is 40,000 Rand. So you need to put down 40,000 Rand to buy 1 Berea flat, but you need 2 per year. So you have to put 80,000 Rand in per year for 5 years. Eventually, you'll have 10 flats and you'll be financially free. So that was a very simple example, but that's the process that I would take if I was working with someone, to say, what's your goal? How can we break it down so that you know what your achievable steps are to get
right. And I think, one of the first things you said is really, it has to be achievable. Like we can't do this if you don't have that 80K to invest in Berea. Then maybe look in a different area. And I think
or take a plan of 15 years or 20 years. I use the 5 years as an example, but the reality is, if you're going to retire in 5 years' time, you're probably going to be bored. It might take you a bit longer. That's okay.
Yeah. So I think just be realistic with your goals and know, I think, whether it is to retire early or whether it's just to be financially free and still keep your job, like you said, you don't want to be bored, but continue being realistic about your goals. And I think your financial freedom plan can change. Coming with the different investments that you've made along the way. Are there any negative aspects about creating a financial freedom plan? Are there any downfalls to this?
Well, it's impossible to achieve. Let's start with that, because every time you reach a new stage in your life, your financial expenses increase, right? So you might have a goal that in 5 years' time, if I'm earning 20,000 Rand per month, I'm financially free, but then you're going to have a kid. And then you're going to have 2 kids. And then you're going to want to live in a nicer house. You want to drive that car. I think the interesting thing about financial freedom is not only increasing your income, but reducing your desire to consume. If you're not able to reduce your expenditure, it doesn't matter how much you earn. If you're always going to be looking for the next lifestyle upgrade, you're going to get stuck. So I guess, that's for me, the downside is that this plan is never really achievable until you can increase your income, but also reduce your expense at the same time.
Exactly. And I think a lot of us, as soon as our income increases, now we want better things, because we almost, it's like we've never had this. And now we finally have our first big salary. Let's go straight to Sandton. Where if we're realistic.
The problem with that is the short-term gratification is never as satisfying as the long-term freedom. And one of my biggest motivations is I'd rather sacrifice the short-term costs now, but live a life of freedom where I don't have to report to anyone, do what I want, with whom I want, wherever I want. And if that means that I don't buy the designer clothes today, that's a sacrifice I'm willing to make.
Exactly, because like you said, you reap what you sow. And if it comes in the long run, I think, like you said, you'll appreciate it more, just to be patient also with your goals and to be realistic in essence. I just want to close off because I didn't even see the time, the chats were just going. You've written a book, Lawrence, which is Financial Freedom Through Property, and a step-by-step guide really to create wealth. And like you said in the beginning of the podcast, it's generational wealth. We're not just creating it for now, it's for the future. And maybe you have some tips for first-time home buyers, which you maybe mention in the book, that can help us to our long-term gratification goal.
Yeah. Well, thanks for mentioning it. Financial Freedom Through Property, it is a little pet project of mine, and it's been doing really well. So I'm grateful for anybody who has gotten themselves a copy. My next book actually is called Generational Wealth. I just got approval from the publishers this week to get that going. So hopefully that'll be in the bookstores soon. My advice, sure. I think the most important thing is get educated. Now, you can go to my YouTube channel. There's plenty of free videos. You can go to the Private Property Podcast. There's tons of free knowledge that they are giving out. You can buy books that are super cheap but give you tons of value. You can attend online courses. I mean, the amount of property knowledge that's out there. And the reason why I say this is the first step is because property is an expensive asset. And if you make a mistake, it's usually an expensive one. So you don't want to get into that position where you're buying your first or second investment and you end up making quite a big, costly mistake, and it takes you out of the game for 5 years, because then you've just pushed your financial freedom plans far back. So step one, get educated. The second step that I would say is spend less than you earn. You need to treat your personal finances like a business. I know too many people that will spend 40,000, but they're only making 35. So they get into credit card debt to sustain a lifestyle that they can't afford because they're trying to impress people that they don't even like, you know? So spend less than you earn, invest the difference. You don't have to start investing in property, put it into a savings account. It's fine if you don't have the 80,000 deposit that you need today, but make sure that you're saving, spend less than you earn, saving your money until you can buy a property and then invest for compound interest.
Thank you so much, Lawrence, for that. We do have, I hate letting people's questions just go by. I'd love to ask them. So is it Randir Ishwaral? He's asking, how do you find an ideal investment property for the first-time home buyer?
It's going to come back down to strategy. It depends what you want to do with it. If you're looking for rental, buy and hold strategies, you go into low income areas that are highly densely populated in your town areas. If you're looking for capital appreciation, you're going into your suburbs, your wealthier areas, your Santons and Greenpoints. If you're looking for student accommodation, go to close to universities, varsities, make sure that it's accredited with the right places. So it's a difficult question to answer. I think step number one, what's your goal? What's your plan? Number two, what's your strategy? And number three, you can find the area where it will work.
Exactly. So thank you so much, Lawrence. You've really given us the tips and the tricks to, especially for first-time home buyers, you know, you've brought it down for us to understand. And we have just a comment, it's not a question, from Lesejo Mkonto, who says, reduce your expenditures. She loves that. So if that's all you took from this evening's chat, continue to I love what you said earlier about the short-term goals, but focus on the long-term gratifications of it, you know. And that's everything we take from this evening. Thank you so much, Lawrence. Congrats on your second book. I can't wait to read it, and have a blessed evening further.
Thanks, Estee. Thanks everyone for joining, and happy investing.
Thanks to the viewers who watched. See you next time, same place.